Tom Bowley, Chief Market Strategist here at EarningsBeats. Hey, good morning, everybody, and welcome to this Tuesday, January 28th, 2025 edition of Trading Places Live at EarningsBeats.com. I'm Tom Bowley, Chief Market Strategist here at EarningsBeats. It's a pleasure to be with you, all of you this morning. We've got Fed meeting starting today. I guess that's probably the biggest news. Of course, we won't hear anything from them until tomorrow, Wednesday afternoon, about 2 p.m. Eastern Standard Time. That's when the Fed is expected to leave rates unchanged and then prepare for whatever it is that Fed Chief Powell has to say this month. Since the last meeting, we did get a very tame CPI reading, the core CPI coming in at 0.2% rise for the month of December, which was just a little bit below the expected 0.3% rise. And the core PPI, which was expected to come in with a rise of 0.2%, came in flat. So, the Fed was kind of, I guess, waffling a little bit, which is something they've seemed to do pretty well over the last few years. But they were waffling, thinking that, hey, we may need to cut down the number of rate cuts that we're going to have in 2025. It was originally expected there would be 4 of them. Then they cut it back to 2. Just going to be really interested to see what they have to say about inflation this month. But anyhow, the market many times will react pretty strongly to whatever it is the Fed has to say. So, I'm kind of looking for fireworks just because that's generally what we get with a Fed meeting. Sometimes it's just a knee-jerk reaction. So, you might see a couple of different moves this afternoon before maybe the real one into the close. But those are all some of the things that we just have to navigate as traders, be on our toes, know when to be aggressive, when not to be. I'd say this afternoon is a little bit of a gamble. So for me, it definitely would be a non-aggressive kind of a day. Let the market tell us a little bit about, which direction it may head, and then kind of go from there. I wrote to our members over the weekend. We do have some issues in the market, and I'll keep all of our members posted throughout the week in our daily market reports, keep you updated. But there are some things that we definitely want to kind of keep an eye on, things that are changing, as I speak, over the past couple of weeks to a couple of months, mostly in the sentiment area. And so those are things that we're just going to have to, really monitor closely and keep an eye on, looking for what we think could be short-term market direction. We do have a lot of key earnings coming out later this week. So in addition to the Fed, we've got companies like Apple, Microsoft, Meta Platforms, Tesla, all reporting. These are 4 of the Mag 7 stocks, Magnificent 7. And so we'll see how they come out. That's going to be that'll certainly, be a big factor in what happens. We got Amazon and Google next week. So 6 of the 7 Mag stocks were literally within about a week's time of one another. And those 6 are, all 7 Mag stocks make up, and NVIDIA is the other one, by the way. NVIDIA reports later in February, in February. Probably around the 20th, 21st, 22nd. That's usually about when NVIDIA reports. So we still got probably 3-4 weeks to go before we get to that one. But of the 6 that are reporting, probably somewhere in the neighborhood of about, I want to say probably about 20. I'm trying to think of the S&P 500, maybe 25% of the S&P 500, the valuation. I could be getting my numbers off. I know with the XLK, which is the technology ETF, you got Microsoft and Apple, both very, very heavily weighted in the XLK. And of course, we saw the breakout in the technology area last week, which I thought was great. But then we started off yesterday with an absolutely horrible day in technology, mostly relating to AI stocks. So we'll go ahead and get into that and take a look at what happened there yesterday. So let's start off with the major indices. Transportation actually up almost 1.5%. The Dow Jones up about 2/3%. Russell 2000 down, but less than 1%. Mid caps down a little bit more than 1%. S&P 1.5%. But look at the NASDAQ. NASDAQ down almost 3% on the session. not good action. And if we look at the sectors, look at the bottom here. It's very clear what happened yesterday. It was a massive sell-off in technology, but it wasn't all technology. It was even narrowed down within technology. It was one of the worst days we've seen on semiconductors. If we go into the technology area here, here's that breakout. Then we got a reversing candle, and then quickly all the way back down to the recent support going back these last few months. So, but I want you to pay attention to one thing in particular. Most of it was a gap down. And a lot of times selling begins by what I think are market makers creating the panic. And they do that by lowering prices at the opening bell. All of a sudden you wake up, nothing really has happened in terms of fundamentals. Many of the companies went down yesterday. Didn't have anything to do with earnings. It was about potentially this company in China that is going to sell AI chips much cheaper. That was what got a lot of folks going to the downside. A lot of these AI stocks got hit based on something that may or may not happen, something that may or may not be better. We don't even know. And yet stocks were losing 10, 15% at the opening bell. And then some continued to sell off quite a bit. Many of the AI stocks that I looked at, of course, NVIDIA was maybe the big one. So we'll pull that chart up, show you that. Here's NVIDIA gapping down. Now, keep in mind, it was down $24 yesterday, but from open to close, it was down $6. $6 versus $24 is a big difference. $18 was lost at the opening bell. I look at a stock like Celestica, CLS, another one, got absolutely crushed. Stock down 28% yesterday. From open to close, it was down 18. So almost half of its loss was at the opening bell. Same thing for a stock like Astera Labs. That's ALAB. Big gap down to 102 at the open. We did finish at 83, so down 19 after the open. That was still a lot of distribution that took place, but it was probably 40% of the down move was at the opening bell, dropping down to 102 from the prior low, which was at about the prior close, which was right around that 115 area. So big move to the downside at the open, then continuing. But there were plenty of others. I noticed VST, big drop yesterday, losing $54 from 191 down to 137. And $37 of the $54 loss was at the opening bell. So now what you got to do is look to some recent areas of support, look for perhaps reversing candles at those levels of support. So I think here on VST, you've got some pretty decent support coming in around 130 to 135. We closed at 137. Gap support is down at about 127, 128. So maybe that 127 to 135 area. But, after the big drop yesterday, we're almost there. So it could be one of these other, depending on how we trade here in the short term, we start to go to lower lows. We could see, moves down to perhaps that 115, 110 area. The breakout here occurred at about 108. There are a number of levels when you get into these stocks. It just simply kept going higher and higher. So this is a scary area of the market right now. But it's one of the reasons why I talk about, in these stocks that have just been going straight up, how risky they are to jump in. They don't always come back. Sometimes they just keep going higher. But every once in a while, you'll get days like we had yesterday. And that's what makes these stocks so difficult to buy after they've already made big moves to the upside. Let's see, what else do I have for today? Well, let's go ahead and take a look at the 10-year Treasury yield, because that was bouncing back up again today, up about 4 basis points to 4.57%. Yesterday was another big drop. Part of that maybe led to some of the outperformance that we saw in the small caps, the fact that the yields were coming back down. Also some of the signs that I looked at over the weekend that suggest, maybe we'll have a little bit of rough waters ahead. It didn't look as bad to me for the Russell 2000. Just some of the signals I was looking at. So maybe if we do see some downside action, maybe the Russell 2000 holds up a little bit better over the course of the next month or two. That's certainly a possibility based on everything I was talking about at the beginning of the year and have been talking about for quite a while. I believe the short-term rates, that Fed funds rate, is going to continue to move lower, even if it doesn't move lower today or tomorrow when the Fed announcement comes out. So I think that's going to be one thing that continues to favor the small caps, is lower Fed funds rate down the road, but probably not happening tomorrow. How about maybe some of those stocks we just looked at? Maybe I'll pull up the early morning action here and just see pre-market if they're recovering. I looked at them a little bit last night. I really haven't looked at them this morning. ALAB is back up $5, 6% to 88. I'm not surprised after the huge sell-off. It's just a question of whether or not this sticks. Usually you don't have just one day like this of selling with a close on the low or near the low, and then all of a sudden you just start moving back up again. That would be somewhat unusual without at least getting maybe a double bottom. But I did talk yesterday about possibly seeing a little bit of movement back to the upside, just because some of these drops were so big. There's a lot of work to be done. Like on ALAB, as I mentioned on the daily chart that we were looking at, 102 was the open on the gap down. So that's going to be a key area of resistance. So, maybe we can get back up to that 100, 102 level in time and see if we can get through that. But if we don't, then that's when I would probably be thinking about a double bottom. And if the market overall begins to sell off, this is a group, because they've now turned weak, now that they're trading below their moving averages on heavy volume, these could be areas that become targets of some of the shorts on any kind of a bounce. So that's going to be something to have to watch in the near term as well. But there's ALAB, CLS. I imagine they're all going to be up, 4, 5, 6%. Celestica up almost 5% this morning. NVIDIA, big stock for many out there, up about 2.5%. It didn't get hit as hard on a percentage basis, so not getting quite as much of a rebound, but still getting back up above 121, which is not bad. VST gaining back $6, almost 4.75% almost. So, we'll see whether or not some of that carries over throughout the day. But again, many eyes going to be on the Fed. Getting back to the sectors just for a minute, I did want to mention, remember healthcare? I was talking about how healthcare was really struggling. That 136, 137 level on the XLV was really good long-term support. In case you don't remember, or maybe you weren't around when we looked at this, let's take a look at the weekly chart here. And if you look at all these tops coming across, kind of zero in a little bit. But here were they high. This was the 135 price right here. And you can see we went just above it, maybe to about 137. Here was 135. Here was 135. And then finally, we break out above this 135, 137 area, ultimately getting all the way up to 160. But look at where the lows came back down to. This low over here, 137. This low right here down to about 135. And I kept saying this was a major support level for healthcare. And so bouncing from that level was not something that we should be shocked by. And that's exactly what we've done. We've bounced back, even though we've seen some selling in certain areas of the market. That money is rotating, which is bullish, by the way, longer term. It's not like money is just completely leaving the market. The S&P 500 was able to cut its losses to about 1.5% yesterday, partly because we saw money rotating into some of these other groups. So if we go back and we look at that sector summary again, check out how many groups actually went up yesterday. 7 of them. Only 4 were down. The 4 that went down pretty good, all 1% or more. But really, the biggest hit to the stock market was in technology, because technology is about 32% of the S&P 500. And it's a lot more of the NASDAQ 100, probably 50% of the NASDAQ 100. So that combination really took down the market, just the fact that we saw so much weakness in such a heavily weighted area of the market. That's what helped the market, back a couple of years ago when we weren't getting breadth, we weren't getting wide participation, we weren't getting strength from any of these other areas. That's what was carrying the market to the upside, technology. Well, now what we saw yesterday was a little bit of a flip of that. We saw technology getting hit hard, and it was all these other areas that actually were helping to hold the market up. It was one of the reasons why the Dow Jones was positive yesterday. Not as much weighting in technology. Remember, the Dow Jones is weighted based on price. The higher the price of the stock, the higher the weighting. So Goldman Sachs is the number one weighted stock in the Dow. It represents about 8% of the Dow. That's in the financial space. Look at the financials. This is why the Dow didn't participate to the downside, and why the S&P went down but didn't go down as much, because it's not as heavily weighted in technology. So when you get a big bad day like that in technology, NASDAQ's going to definitely take the brunt of that kind of selling. Anyway, S&P 500 right now. So did that do any damage? Well, I mean, we were in breakout mode. We came back down. We opened below the moving averages, but closed back above. Nice hollow candle. So I'm not seeing the kind of mass exodus that would be worrying me. I think if you see mass exodus and a breakdown of support, I'm going to say, probably in the short term, 5,700 to 5,800 is the support area. So if we were to continue to pull back in the near term, I would be looking for support in that area. If that fails to hold, I think the intermediate term could get much dicier, and that could bring in lows down to maybe 5,500, possibly even a little bit below 5,500, but I'm going to say 5,500 to 5,600. So we could threaten if we break below the 5,800 level, we could begin to threaten maybe a correction, 10% correction. So that's something to keep in mind as we go forward. Right now, I think we're fine. But again, as I said earlier, I'm keeping our members at EarningsBeats kind of in the loop, because after we get through this week, I mean, maybe we get a bounce with the Fed. We never know which way we're going to go with the Fed. I suspect that these reports that we're going to have out of the Mag 7, like I said, 6 of them over the next week or so, maybe a little over a week. I expect some really good reports coming out of some of these stocks. And so I could see the market, trying to fight back here, and continue to, threaten all-time highs for maybe this next week or two, depending on how the Fed goes, how these reports come out. But it's after that really starting to bother me a little bit. And like I said, I'll continue to talk about that more in the daily market report that I write every day. NASDAQ 100. Yeah, I mean, we didn't quite get up to the high. You saw the S&P 500 get to an all-time high. Didn't quite do that on the NASDAQ, fell a little short, and then obviously went back down. And then also look at the candlestick that formed. If I really zero in here, so hopefully you can see this a little bit better. The S&P 500, remember, closed above both moving averages and had a hollow candle closing near the high of the day. NASDAQ went up and tested one of the two moving averages, failed, and came back down and finished with a close in the middle of the candlestick as opposed to the upper end of it. So definitely NASDAQ weak, technology weak. And it showed a little bit into the close because it wasn't getting the kind of recovery and rebound that we saw in other areas of the market into the close. Many defensive stocks did well yesterday, value-oriented stocks, which is fine. Some might say, well, no. You've been saying, hey, when defense leads, that's bad. Well, it's bad when you lead on moves to the upside. This was a downside move, at least for the NASDAQ and for the S&P. The only thing up really was the Dow Jones. And you had transportation, which transports are a decent part of the Dow Jones as well. Got some transports in there that certainly we need to pay attention to when we talk about the Dow because of their impact there. IWM stuck between two moving averages. I've said recently, last couple of days, that I'm kind of watching 225 downside, 230 upside. And that's right about where our moving averages reside. It's also to the downside where we've had this pivot area, 225 to 227 for months has been a key area of resistance. It was back then. You can see here, this would have been back in October? Yeah, October. High at 227, failed, gapped above 227 in November with the election, went right back down, tested 226, 227, back up, failed at the high, Then we went back through that 225, 227 support area. That became resistance, couldn't get back through. And now recently we broke above, and now we're testing again from below. So this area has been tested time and time and time again, and it seems to be a pretty big level for the IWM. So if we fail to hold 225, I think you got to hold on to your hats. We could be heading back down to test recent lows. If, on the other hand, we can get back through 230, then I think IWM really has perhaps a straight move up to test that all-time high again, back up over the 240 level. Transports actually did really well. We got down to a key area of support end of December, early January, tested 15,750 multiple times. And I said, well, now potentially we can get back up 16,750. And that was an area where we had gapped up right here. So it was a little bit of a gap resistance zone. It was also where the 50-day moving average resided. We went right through it yesterday. So this could be a signal that we're seeing more of that money rotating toward dividend paying, value oriented, defensive oriented type stocks. All right. Just wanted to take a quick look over at EarningsBeats. This is our home. You can start your 30-day no-cost trial. Simply click on this button, get yourself started. It does require a credit card, but before the 30-day period is over, we will reach out to you, make sure that you want to continue your service. So we don't hope that you just come in and forget about signing up. We will make sure that you want to continue the service. We don't want folks who really aren't interested in our service. We provide a lot of education, a lot of market guidance, research. Some members like parts of those platforms and some like them all. But we've got a very, very strong retention rate with membership, very strong customer satisfaction rate. And, try us out if you haven't already. Also, I want to point out that you can sign up for our free EarningsBeats Digest. This does not require a credit card. So you can subscribe, unsubscribe anytime. But it's a really simple, I call it a newsletter. It's really more like a chart of the day kind of a thing. It's a chart in 2 paragraphs, very simple read. Sometimes it sets up with a possible trade if you so decide. That's completely up to you. But normally I'm posting that chart, annotating it, and showing you the things I like or don't like about the chart and why I think it could go up or down or sideways or whatever. So anyhow, check that out if you haven't already done that. We'd love to have you there. And also, usually I wait till the end of the show, but if you like what we do here at EarningsBeats and you like our YouTube show, make sure you hit the like button, subscribe to our channel. All of that really helps us in terms of our algorithms and so forth with YouTube. Comment, if you like the video or there's something you're interested in or you got a question, feel free to comment. Comments certainly help us as well. So it's not all about signing up, although that obviously is the direct way you can help us at EarningsBeats, signing up for our paid service, but there are a lot of other things you can do as well. So we certainly would appreciate any support that we can get. So thank you for that. All right, let's talk a little bit about a couple stocks here. We got a few more minutes to go before the market opens. I wanted to pull up Meta. I thought Meta, many stocks yesterday, especially in internet and software, we saw gap downs, and market makers seem to use that as an opportunity to accumulate shares, perhaps for some of their institutional clients. I mean, if you look at Meta, we had the gap down, the market was weak, technology was down, and yet Meta had this huge hollow candlestick showing a lot of buying. I mean, this was one of the biggest hollow candlesticks that we have seen probably since the low back in early August. Or maybe this move up back in, that would have been early July. But look at the size of that candle and, look at the volume. That also, you go back, that's one of the heaviest volume days. I mean, this was a quad witching day. It's the third Friday in December. We tend to get those in September, also in June and in March. But outside of the quad witching days, we hadn't seen a volume that strong since back at the beginning of August. And that was with the Fed meeting. So there was a lot of activity taking place in stocks like Meta. And it was accumulation. So there are definitely two sides to this market. We see the one side with the big gap downs, the AI stocks getting pounded, but then we see gap downs in other areas. And where was that money going that was coming out of AI? Some of it was actually going into some of the other aggressive stocks, in addition to the more value-oriented dividend-paying kinds of stocks. So it wasn't all bad yesterday. Again, what I'm more concerned about is what happens the rest of this week with the Fed, with these earnings coming up next week into earnings. And then once you get through the first few days of February, which will take us into the early middle part of next week, that's when things can start to get a little bit dicier from a historical perspective, which would then line up possibly with some other signals. But again, I'll keep you updated on those signals. So I wanted to also pull up the earnings. This is our upcoming earnings chart list, and we do these every week. And so you can check these out, but it's one way where you can look at all of the upcoming earnings, or all of the earnings that were reported yesterday after the close, and today before the open. We have all of those in one chart list. And so the beauty is you can, on stock charts, just pull up view all. First of all, you can download. We do these chart lists, but then we provide you the link and a password that you can use to download these into your account at Stock Charts if you're a Stock Charts member at the extra or pro level. If you're a basic member, I think you only get one chart list, and I think that's your default chart list that Stock Charts gives you, so you can't download any from our website. But if you're an extra pro member, you can have up to, I think, 250 or 350 chart lists. So everyone, we probably have 20 or 25 that if you become a member and you're a Stock Charts member, you could download immediately. All of our portfolios, our strong earnings chart list, strong future earnings chart list, raised guidance chart list, bullish trifecta chart list, strong AD chart list, short squeeze chart list. A lot of the research we do, you just download it right into your account. So it's pretty cool. But anyway, what you can do is go into this upcoming earnings chart list and you can hit this summary. Now, the market hasn't opened yet, so we don't know. It's going to open in about 3 minutes. But it'll tell us the initial reaction of all the stocks that just reported, either yesterday after the closing or today before the opening bell. And so it's just a great way. Rather than what I used to do is I would have a list from like Zacks of companies that would report, and I would go through and have to type in, one at a time to see what the earnings reaction was, until I started working with the Stock Charts platform. And we can just set up upcoming earnings right in here in advance. And so when the market opens at 9:31, I can come in here and click to update this, and I'll be able to see every company that has good positive initial reaction to their earnings. And then I can click on this again. It'll bring up the ones that didn't do well. Now, again, what we're showing right now is what happened yesterday. So you can see a couple of stocks, and I can bring up columns for sectors and industries. So if I'm looking at what didn't work yesterday, you can see technology, industrial, technology, industrial, technology, industrial. Hey, if we go back and look at what didn't work yesterday, technology, industrial. Those were the areas that didn't work. So pretty simple to look at this and say, okay, well, except for this one financial, it's basically technology and industrials that did not do well, coming off of or getting ready for its earnings report. Now, the ones that actually reacted to yesterday's earnings would have been those that came out in the morning on Monday. So here are the reactions. And so we now know AT&T got the biggest reaction from its earnings yesterday. Bank of Hawaii did well. Most of these were financial companies, banks, asset managers, so forth. But they mostly did well. The only one that struggled was Sofi, consumer finance company, down about 10%. I think most of that was at the open. Yeah, we gapped down. So it really wasn't a lot of selling. It was just at the open. Big volume, because obviously if you're in the stock at 18 and you see it open at 15.93, you're going to get some folks panicking out when you see an earnings report come out and the stock down that much at the open. But, to me, it was just a little bit of this high wave candle where we had a lot of indecision. had a lot of buyers, took it up to 17 intraday. We also had some sellers take it down to the 50-day. But all in all, it was just a kind of a back and forth kind of a day after a huge gap down. So to me, that's more manipulation than it is distribution. Let's see. It's 9:30. So let's go first. Just going to bring up the market. See if we can. So Sofi anyway, down just a little bit here at the open. Let's take a look at a couple of those AI stocks. So let's take a look at CLS. So there's your initial open. It is up about 5%. ALAB up about 6%. So right about where it looked like in pre-market. NVIDIA right now up 2.3%, but already, gapping up but not really doing much since then, which has only been like a minute. What was the other one I looked? VST. Gap up, but also selling off here short term. And let's go look at those earnings reports, and then we'll wrap up the show. So let's go back over now. What we can do is bring up that chart list that has all the companies that reported yesterday after the close and today before the open. And we can get a quick snapshot very quickly at what's working. Financial, industrial, discretionary, 3 discretionary. We've got a couple technology stocks. So SANM, which was down yesterday, back up 5% today with earnings. CVLT, software company, up 4.5% with earnings. Boeing up 4% after its earnings. What's not working today? Oh, by the way, Royal Caribbean Cruises continue to cruise, up 5% today with its earnings. Not working, JetBlue Airlines. I just wrote to our members at EarningsBeats, and I said the whole airline thing could be done. I mean, if you look just take a look at the seasonality of the airline index, which is the $DJUSAR, and just go back 20 years and take a look at what happens with airlines. They do really well through about January, and then from February on, things historically just don't seem to work out very well. So airlines, I would be concerned with anyway, all airlines, just because I feel like we've been through a bullish period. And if you look long-term at airlines, they're not great stocks to buy and hold. They go through periods where they shoot higher and then they shoot right back down again. They don't tend to be very steady, long-term, solid investments. So if you've been in airlines last few months and made your money, I'd be looking at these charts. I'd be looking at seasonality, and maybe thinking about at least leveraging. Maybe hedging a little bit with when I say leveraging, I'm not meaning go triple long. I mean, taking the longs that you have and perhaps using that to maybe, buy puts, sell calls that at least cover some of the downside. I'd prefer buying puts. But that's just, again, my opinion on what I've seen in history with airlines. GM down 10%. Seems like really the only auto that really matters to me seems to be Tesla. And they report later this week. So that's going to be big. But not a lot of huge drops with these earnings. Mostly, 3% or less. Again, maybe a handful. Down more than that. One of the defense stocks, Lockheed Martin, and again, GM and JetBlue. And one more look at the Xerox, now up to 9%. That just moved a little bit. And here we've got this discretionary company now up 8%, leading to the upside. Boeing 4.7, still moving to the upside, and so forth. But anyway, here's the list. This is all the companies. Now imagine, this is with, you can go to edit and see how many companies are on here. This is with 37 companies reporting. The one for tonight's earnings and tomorrow morning's earnings jumps to 53. And then the one for Wednesday evening into Thursday morning jumps to 98. And then Thursday evening into Friday morning is another 61. And you can see Apple reporting Thursday evening, Visa, KLA, Corp, Intel, Team. That's a fairly good size software company to keep an eye on. Anyhow, Got a lot going on there. So let's take a quick look at what's going on in the market. And we'll end the show. We got the Dow Jones up 52, NASDAQ up 30, S&P up 3, fractionally. S&P 5, or excuse me, the small caps down just slightly. Let's see what the IWM is doing. It is down about 1/10%, 226 and a quarter, still hanging out right above its 20-day moving average. If you believe, that this is the time, I mean, you could make an argument for leverage on IWM with the TNA 3 times, but you've got to hold this area. I mean, even on an intraday move, if it went below yesterday's low, I'd probably have to move back out of the TNA. So it either works from here quickly or you're out. And even going into leverage the day before a Fed meeting, that, you got to be very aggressive. You got to have a gambler's mentality, get the dice out and rolling in order to get into the TNA. But that's completely up to each individual. I'm just, looking at it from a potential rally standpoint. You get up through the 20, you come back down to the 20. That's usually where you bounce if this is an uptrend. So this is where you can get in and at least have, you can at least set stops intraday if if it starts to turn against you. So that's why, I would, possibly favor it, is just because it's right at a key support area. All right. Anyhow, that's it. Appreciate everybody tuning in. Again, like the video and subscribe to our channel. That would really help us to grow our community on YouTube. And that's one of the things that we're really trying to do. We've been growing this community at about a 50% clip every year. But we'd like to grow it maybe at 100% or 150%. And many of you can help us do that. So please do like the video, subscribe to the channel, and then leave us a comment. We'd love to hear from you. Have a great day, everybody. Happy trading.